Hey guys, Alchemist here. So welcome to episode 5 of the weekly forecasts for AU, EU, and GU. As promised in last week's forecast, I have actually uploaded another video on Friday, 2 days ago, about how I stay productive along with a Notion template, which is completely free for you to download. You won't need to input your email address or anything like that. It's just simply a nice thing that I wanted to do for everyone. So please do have a look. I will be linking it up in the top corner of this video now. So if you did want to go ahead and have a look at that after you watch this video, that would be great. And please, if you do have any feedback or think more things that you'd like to see on the channel, please do let me know. If you're new here, please do like, comment, and subscribe, and make sure you turn your notification bell on so that you don't miss any future uploads. And this channel is all ideally here for Forex trading, along with personal development, health and fitness, as well as your financial fundamentals. So I have created multiple courses. The trading mentorship is up and running, and there will be a self-mastery course, which will be released by the end of the year, along with the financial fundamentals course as well, where you'll be able to gain access to all three, and so that you can actually develop as a holistic trader. And I'll be here with you along the way to make sure that you succeed, whatever way that actually looks for you. So let's get into it today. We'll have a look at AU first. And if we look on the weekly, what we need to identify here is our weekly supply and demand zones. So in terms of our weekly supply, it's going to be this candle here that actually set a lower low, lower than this low here. So that's going to be our supply zone. And then in terms of our demand, what we're going to do is we're going to have a look here, look to the left as to what we're actually currently interacting with. The last sort of zone we were looking at last week was this bearish candle. And we can see we've actually swept the liquidity below here, but we haven't yet closed below. So this will be demand. This is an important zone as well, as it's interacted with this supply zone and has actually led to supply failure above here. Okay. So this was a very important demand zone. If price was to remain bullish, this ideally should hold. It hasn't yet failed because it looks like it's just a liquidity sweep for the moment. We haven't yet closed below, so we'll wait to see how price develops throughout the week as well. So this here, what is this sweep? And then that's all we need to do on the weekly. We'll jump down to the daily. So our daily structure point, let's have a look at this one here. So how many pips is this? That's not enough. It'll be from here to here. Yeah, so 217 pips there. This is going to identify as our daily breaker structure. Daily boss. Highest point above this is going to be our daily high. And again, if any of you have yet to see my video as to how I mark up market structure, I'll be linking it above as well here, so you can go ahead and watch that after this video. If you do have any questions, please do let me know. It's a very systematic way to know that you're always going to be on the right side and that you're not going to keep switching your bias every 2 minutes. In terms of our daily low, we need to see a bullish pullback greater than 110 pips. So we have had that. So this here is going to be our daily low. Perfect. So we don't actually mark premium and discount on the daily, but just to let you know, this is the range that we're trading within. We'll jump down to the 4 hour where the fun starts. Okay, so in terms of our 4 hour structure, we need to identify the daily boss, find the 4 hour structure that led to the daily boss, and then continue price down. Ideally, let's have a look at this one here, this pullback. So from this low to this high, that's not enough. That won't be enough, so it will be this breaker structure here. So from this candle to this candle, yep. Perfect, so this is our 4 hour boss. Highest point above here is going to be our 4 hour high. And then this will also be our 4 hour low. So I'm just going to name this daily plus FOREX low. Beautiful. So in terms of premium and discount on the 4 hour, it's going to be from this high to this low. And we can see we have actually already fulfilled our pullback potentially. We have come all the way back up into premium. Let's identify some POIs. So the easiest two to do straight away are going to be your extremes. So this is the extreme demand. And up here, this is the extreme supply, but then it's mitigated by the next candle. So we can then take this candle here. We can also see that the top of the wick has yet to be mitigated. So we can still be marking that out as a separate supply zone as well. We could even see that. Oh, sorry. We could even see that this could potentially be inducement for the higher zone above. And if we take this here, This was a demand zone. Prices interacted with that demand zone and left these buy to sell wicks. We have also interacted with this wick here. There's another demand zone. We have these buy to sell wicks, which were immediately mitigated and swept after we had this 4-hour breakout structure. So you can see here this was a sweep. And we can see that this wick itself has yet to be mitigated. Okay. These flat highs can often be used as a liquidity run. That's liquidity to be swept. We can see we've actually, with this candle here, swept the liquidity above all of these highs. And then this has been mitigated by the next supply zone. As this has already come back to mitigate there, I'm just going to be taking the wick above. That's the next unmitigated zone. And we're now tapping into the last, well, there's a couple more zones here that I want to mark up. This here was a supply zone. Prices interacted with that supply zone, left these buy to sell wicks. They've held for one push up. However, once we saw 15-minute structure start to shift here bearish, and we had catalysts for pullback starting to fail, we could take this low as a targeted low. And shout out to David. I believe he caught a very, very nice trade here on Friday. It was well over 15 to 20R based on the outlook that I had given on Friday as well. So shout out to David. That was a great trade. Well done. And once we knew that this was a targeted low, we then looked to this as the last sort of demand zone that if this is to fail, then price is going to be targeting the complete low of this 4-hour leg as well. So now that we're in this zone, we could potentially start to see a bit of a pullback. We can even see these buy to sell wicks here. And we have some more buy to sell wicks here. Okay, which have also had interaction. So this has come into this. And these came into here, actually swept the liquidity below this low. Had a very short pullback and then continued bearish. So potentially what I'd like to see is price have a bit of a pullback, either to this zone, or ideally this would be a nice zone to be shorting from. But if we do get 15-minute realignment here, we can potentially be taking shorts from here to this 4-hour low. But ideally, if we did come into a price zone above here, and then we saw 15-minute realignment, we can definitely be taking shorts out of here as long as our liquidity and entry models have been met to be targeting this low below. So I am just going to leave this here as well, just to have a look next week on the weekend when I do the following week's outlook to see if this was correct or if I was completely wrong. We can also see that there is going to be liquidity, above these highs here. Okay, so if there was enough bullish momentum to be pushing us up, ideally there's going to be a lot of liquidity here. So we could be seeing price coming higher up into this zone. Again, if we do see 15-minute realignment here, this would be an even better place because obviously it's just going to give us a much larger target. If we were to get into something here, it's over 220 pips. I mean, entering with a 2 or 2.5 pip stop loss, close to 100R, that would be a great trade. Let me just remark this one correctly. That's liquidity to be swept. It hasn't yet been swept. So yeah, they're the two things I'd be looking for on AU. Shorts are going to be much higher probability, again, just as we saw last week, especially that this zone has failed. We're in this last this is the last point of defense, I guess, for AU. If this is to fail, we're going to continue seeing more bearish momentum enter the market as well. So now let's jump on and have a look at EU. So looking at EU, we can see that this week we have actually had quite a bullish pullback, which is good. We were sort of hoping for that to be able to take then continuation shorts. So starting off on the weekly, let's identify our supply and demand zones. So we can see now that we've set this new lower low, we can identify this here as our supply zone. And then for our demand, what we'll do is we'll just drop a horizontal line here, and then we'll look to the left and sort of see what we're coming off of here. Again, it was quite a while ago since we were this low on EU. Okay, so we look like we've actually swept this whole zone that we were looking at last week. So what we could identify here was this was sort of the last POI that was still holding. And we can see that this one here has also swept liquidity below these lows in that one there. We'll get rid of this one and we'll get rid of this. Mark this out as our demand. And then we'll drag this across. And we can see we haven't actually closed below there, but we have swept below it, which is potentially what has given us the liquidity for this bullish reaction that we've had since. So that's our demand zone. It is quite large, so I'm not going to keep it there the whole time. Let me just minimize it down to the candle where it touched. Perfect. And here, after we set this lower low below this low, then this was our weekly supply zone. So this was a liquidity sweep. Perfect. And we'll jump down to the daily. So on the daily, what can we identify? So the last daily breakup structure we were looking at last week was here. Now that we've had this pullback here, which was 333 pips, let's actually have a look at this pullback here. Yeah, this was less than 100, so I'm not going to be using this one. But this one here, now that we've had a very significant bullish pullback of 333 pips, and then we've closed below, this is where I'm going to be identifying our daily boss. Leaving the highest point above this as the daily high. And after this bullish pullback of 300 and so pips, that's going to be our daily low. Perfect. So our daily range is going to be from this high to this low. Awesome. We'll jump down to the 4 hour. Okay, so on the 4 hour, let's identify this leg of price action here. So how much was this pullback? How many pips? This was over 100 pips. So at the time, this would have been a 4 hour boss. We came down after we had this bullish pullback here of how many pips was this? 100 pips, exactly 100.5 pips. Then we broke. This is where the current 4 hour breakup structure is. So that is our 4 hour boss. Highest point above there is our 4 hour high. And the lowest point is going to be the 4 hour low. So the daily low is also going to be our 4 hour low. Actually, let's have a look at this pullback here. Oh, okay. So I've missed one. So here, this one here, this was greater than 100 pips. And did we close below? Yes, we did. So our actual 4 hour boss is from this candle here to this candle here. Okay. Therefore, at the time, this would have been the 4 hour high. And then what happens here is we get another 4 hour boss. Once we have this candle closing outside, this becomes our new 4 hour boss. Then our 4 hour low becomes this one here. Let's see how many pips this pullback was. Greater than 100 pips. So that at the time would have been our 4 hour high. And then again, that fails. So we have a new 4 hour breakup structure. Beautiful. This is going to be our 4 hour low. And then how many pips did we pull back? Perfect. So now this is our 4 hour high. A much smaller 4 hour range, which is great. It gives us more opportunity to actually be taking trades. So if this is our high, that's our low, and that's our boss. Our 4 hour range is from here to here. And we can see that the 4 hour is going bullish to potentially be retracing up to EQ of the daily range before we then see continuation short. So even if we look at this piece of price action here, if we look at this, so this was a demand zone that led to a higher high. Price has interacted with this and created this candle here, which would have been a supply zone that broke and led to this daily boss. And then this next candle has actually mitigated this supply. So we could potentially be taking the wick, as this next candle also did come back up. So we can look at this zone here. This is a supply zone, which is in premium of 4 hour. This zone here has had interaction, and then this has interacted with that. So therefore it has interaction as well. We could potentially be seeing price coming up to this zone, tapping into this before giving us continuation shorts. If this doesn't hold and we do start to see catalysts for pullback on the way fail, we can therefore take this daily low to be a targeted low because it would have failed in its objective of setting a higher high. And remember, our daily high is all the way up here. So if it does fail in its objective and we do start to see catalysts for pullback fail along the way, we could potentially be looking at this low as being targeted and be trading towards here. So we'll map out a few more POIs on this pair. This would have been the extreme demand on the daily range. We also have this within the 4 hour range. We zoom in. These buy to sell wicks have actually just stopped within this imbalance. Potentially on the 15-minute, there might have been something here which has caused this reaction. But if we can't see it on this time frame, then we're not going to be marking it. What we can see here is this is also a demand range. Prices then pushed in, absorbed and swept the liquidity above these highs. Okay, so we had a sweep. Or did we have a sweep here? The high of this candle, 98520, and this is 520. They're equal highs. Interesting. They may potentially be a place for liquidity to be swept in the future. So this is liquidity to be swept. And then we even have these buy to sell wicks, so we could potentially be refining it to these. We can just say that we have actually swept the liquidity above these buy to sell wicks here. So we haven't had a candle close above there, but we have swept liquidity. And this is potentially, once we've swept this may be what has given us the volume to be trading lower. And then potentially we could be looking, so this is already fulfilled its pullback into into discount of the 4-hour leg. So after coming down, breaking the 4-hour structure here, so we're bullish. And then we've already retraced the discount. The expectation of order flow is to then see another higher high. We could potentially be seeing this higher high being set into here, which would be in premium of the daily range. And then if we see a 15-minute realignment in terms of a 15-minute change of character here, when we take the high and we take the low, we could potentially be taking shorts from this zone, as the daily would be bearish. If 15-minute was to switch bearish, we could potentially be taking shorts from here. It will be just until the next unmitigated demand zone, as long as 4-hour is bullish. But if 4-hour does switch to bearish, we can be holding shorts from here all the way into the 4-hour low. And again, all the members of the community, the ones who are going through the entries module this week and last week, have all received flowcharts exactly depicting this. So if 4-hour is bearish, where can we be entering and where are we targeting? If 4-hour is bullish and we're looking to take shorts, what we need to wait for to see before then taking that short. And if we are getting into shorts, where we should be holding them to. So again, if you're interested or you do have any questions on the course, please do let me know. I'm actually going to leave this on this chart like this, and so we can look back at it next week and see if this was accurate or whether I was completely wrong and we're just going to go continue to set lower lows straight away. So let's now jump on and have a look at GU. So just as we saw on EU, we have also had quite a significant bullish pullback on GU. So let's just drop a horizontal line here as well, and let's see what we've tapped into or what we've swept. We drop this there. Have a look to the left. Again, it was a very, very long time ago that we were this low. And wow, yeah, so this is the piece of price action we were looking at last week from 1985. And I think if we look at, yeah, price has actually never been this low in terms of GU. So what we've got here is all-time lows, and it looks like we have just come into this POI here and swept this. So if we look to the left, sorry, to the right. Yeah, so we have swept this, and all the liquidity resting below there is what has allowed price to push all the way back up. So we can look at that as the demand zone. I'm just going to draw it from here just so I don't have to scroll all the way back to this left of the screen and make you have to see that. And in terms of supply, it is still going to be this candle up here. I am inclined to do this one here, but the rules for this would have to be at least 2 candles of a pullback. And this here, this just looks more like a pause. So what we can, if we compare this here to this one, so as we can see, this is one nice leg of price. We did have at least 2 candles trading higher before then seeing another push down. Similarly, that's what we have here. That's what we have here. That's what we have here. Whereas this is just a 1 candle pause on the weekly time frame. Obviously, a week is a very long time in terms of a day trader when we're looking to enter on the 1 minute. But looking at the weekly time zone, this is 1 leg of price. So I'm going to be just identifying this as the supply zone and then jumping down to the daily. Sorry about that. Let me get rid of these guys. Perfect. All right, so if we look at this here, let's identify the most recent daily break of a structure. So let's have a look at how many pips this was. Yeah, 333 pips. How about this one from here to here? So from this low to this high, 110 pips. So I'm happy to use that one there. Greater than 100 pips. Daily boss. Daily high. And the lowest point would be obviously here when we've had such a significant pullback. Wow, 878 pips, I believe I just saw. Yep. So this here would be that daily low. Beautiful. we know that this was a sweep on the daily. I'm just going to, sorry, on the weekly. I'm just going to delete this just so it stays nice and neat. There's our daily boss. There's our daily high. There's our daily low. So therefore our daily leg is from here to here. And we can see we're very high up in premium, potentially tapping into this POI here. But again, we are going to look at this on the 4 hour. We don't mark POIs on the daily. So I'm just going to delete this for now. And we don't need to have our daily range on the daily, we're just on the 4 hour. So in terms of our 4 hour structure, we look back here, we find the 4 hour break of structure that led to the daily, which was this one here. And then we have had another significant pullback from this low to this high. Yep, greater than 100 pips, 150. Just having a look further down, did we have another bullish pullback? No, so this was all just one very, very bearish leg of price. So I'm going to be identifying this here as our 4 hour boss, leading this to be our 4 hour high. And the daily low is also our 4 hour low. Beautiful. So on the 4 hour, let's have a look at our premium and discount. And we can see we're very high up into premium now. As we were looking here, so if we're looking in terms of interaction, yep, so we have this here as a demand zone. Why is this a demand zone? Sorry, 1 second, pull that across. Why is that a demand zone? It's because it led to a higher high. I do understand that it's just wicks on this time frame, but on any lower time frame, there would be a close there. So this for me is it's not going to be a break of structure or anything. I'm just going to mark it as a solid line. So once we set that higher high, we can identify the lowest place or the place that led to this higher high as our demand zone. Then if we look at when price returns to this demand zone, what happens? Well, we tap in with this candle, push a bit lower, close higher. Then we have 2 inside bars where price was just ranging, and then it swept the liquidity above that last inside bar and then failed. So if we get rid of this, we can see the liquidity sweep. Let me just confirm the high here at 1.13826, and this is 827. Oh, it's actually 1 bip lower, so it's not actually a liquidity sweep. Apologies for that. We can just identify this as the POI before the break of structure. We haven't actually tapped into here, so potentially what we can do is we can just have a look at the candle before it as well. Perfect. So we did just tap into that zone, and then we had quite a bearish reaction. And this candle has swept liquidity there above those 2 highs. And we've actually then taken the liquidity above this sweep itself. So we've swept the liquidity resting above these 3 highs, tapped into this supply zone, and that's what's given us fuel for this next leg down. And then this one here definitely has swept liquidity. Therefore, so this would have been the demand zone. We'll take it to the bottom of the wick. And then we've interacted with this. This would be the supply flip. Beautiful. We have actually these buy to sell wicks here as well, which were lower, which is actually what prices mitigated and continued lower. So we can leave this sort of as the extreme of this leg, and these as the last POI before this 4 hour break of structure. That's what price has tapped into and has actually given us a change of character on the 4 hour. Yeah, I think, yeah, we do have a body break there. So that's the chalk down. And we have actually retraced quite high up into this zone as well. So potentially this is where price can continue lower. So if we look at this leg here, we also have these buy to sell wicks. Okay, prices interacted with that, created a new demand zone. Prices then swept that demand zone, and that has allowed us the bullish pullback higher up into the 4 hour change of character. And if we look at this here, we have this wick, which has also come off this demand zone. Sorry, this supply zone, not demand zone. We've actually swept these buy to sell wicks here. Prices then interacted, pushed lower, and then it has the supply zone has failed. So we could potentially be seeing a reaction here. here. We do also have another liquidity sweep here. So as we have this bullish candle, after this candle trading higher, there would be resting liquidity below this low. Prices then swept that, pushed up higher, interacted with this liquidity sweep, then pushed lower. Then here, there were a lot of orders launched, which broke this supply zone here. We have actually swept all the liquidity below here as well. You can see that those two are actually perfect equals. And what do we know with equals? When we create equals like this, price will often then seek the liquidity resting below them. And then that's actually what's occurred here. This is actually tapped into these buy sell wicks here as well. Okay, so we can actually see we're building up a demand chain here. Perfect. So we've retraced back up into premium of the 4 hour. 4 hour is bearish, daily is bearish. We're in premium of the daily as well. And we've just had a 4 hour change of character bearish. So this is a very strong indication that we could be seeing lower prices. So ideally, if we did get something up into here, as long as 15-minute structure was also bearish, we could be taking shorts from here. First target would be here, and you could potentially be even leaving a runner all the way to the bottom, which was over 800 pips, because now that we've had, so yeah, 4 hour is bearish. As long as 15-minute structure is bearish as well. This is not financial advice. This is just how I would trade and what my setups show, that we can be taking shorts from here. Ideally, we'd be taking a very large majority off here. And if we were leaving a runner, potentially only 10%, we could see quite a strong pullback from this zone as well. So I would be very wary of that. But let's see how price develops this week. And I will look forward to looking at the outlook next week. Please do let me know, guys, if you are still getting a lot of value out of these sort of videos, or if you'd prefer me to do more videos like I did on Friday, or what you'd like to see on the channel, because I have noticed that interaction has decreased a little bit, and I want to make sure that the channel is continuing to grow and that I can continue delivering great service and knowledge to you all. So I'd love your feedback and things on how I can improve or what you want to see more of on the channel. And I hope you have a great week ahead, and I'll talk to you all next week. Thank you.